Yo guys, welcome back with me Kenwilboy. In this video, I'm going to talk about simple Forex day trading strategy for beginners. This is very easy, very simple, but also very effective. My name is Kenwilboy. I'm the founder of fortunomarkets, the best broker in the world. And I'm also a professional trader with more than 10 years of experience. Okay, let's begin. So when you're starting to trade Forex, when you're just starting, you might see a lot of strategies or methods out there on the internet, on YouTube, on TikTok, Instagram, whatever. There's tons of strategy. There's thousands of strategy you can choose from. But as a beginner, you might get confused. Oh, which one should I use? ICT, support and resistance, blah, 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 blah. But you don't need to worry. If you want to really make money, this strategy has been proven by thousands of traders, both my students, even the traders who were born before I was born. They are using this strategy and it's very effective. Proven, maybe not thousands, but millions of traders have used this strategy to earn an income. Not only the retail or the small traders, but also institutional traders are using this strategy. So this strategy, it's called follow the trend. It's very simple. The concept is, you can guess from its name, follow the trend. So how do we use this strategy? First, you need to know what is a market trend. Here, this is a very good representation of a market trend. So there is three types of market trends. First is uptrend, second is sideways trend, and the third one is downtrend. So if you want to trade effectively, I would suggest you to only trade during the uptrend and downtrend. Well, during sideways, of course you can trade, but it's not ideal. It's going to be a little bit harder. So the best time for you to trade is during an uptrend and downtrend. This is a very good representation of what an uptrend or downtrend is. You can check it also here. Okay, this is an uptrend. So how do you know that a market is currently in an uptrend or downtrend or sideways trend? Okay, first you need to draw what's called dynamic support and resistance. You need to draw that. As you can see, this yellow line, this is our dynamic support, and this one is our dynamic resistance. So if you don't know what is a support or resistance, support acts like a floor that holds the price up. And resistance is the opposite. Resistance acts as a ceiling that holds the price down. And when the prices touch that area or the resistance area, the prices tends to bounce downward. That's what resistance is. But a support and resistance is not only a horizontal line. Most people would look support and resistance as just a horizontal line, but it can also be a dynamic support or resistance, like this, where the support or resistance is, tilted like this here. This is an uptrend, but an uptrend also has a support or resistance line. Although the support and resistance line might not be horizontal line, it can be like a tilted support or resistance, or what we call dynamic support and resistance, like here. This is a very good representation. If you want to find where the dynamic support or resistance is, you can just take a look on which level the price tends to bounce upward. Like this, on this level, although the level is not horizontal, it's tilted, but you can see that during this price level, this yellow line, the bottom line, the price always bounce upward once it touches this line or this area. But if a support or resistance is broken, it means the price will move in that direction aggressively. So if a support is broken, means the price would fall drastically. It would go into a downtrend, or the uptrend has been broken. If a resistance is broken, resistance is the imaginary ceiling. If a resistance is broken, it means that the demand is strong and the price would go into a strong uptrend. So in a uptrend like this, you want to enter when the prices touches the dynamic support. Here, this yellow line, this is the dynamic support. Remember, okay, this is the dynamic support. This is the dynamic resistance. When the price touches and bounces off the dynamic support, it's a good time for you to enter a buy position. You would not want to enter a sell position in an uptrend. Don't fight the trend. It's a very good analogy, a very good advice. It's a very good way to trade. During an uptrend, you should only trade buy. You should only open a buy position. Well, if you know what you're doing, you can open a sell position, but it's not ideal. During an uptrend, it's good for you to open a buy position only. And during a downtrend, it's good for you to only open a sell position. So don't fight the trend. Basically, what you need to do is you wait for the price to go down just a little bit to touch the support or dynamic support. And after it bounces off a little bit and there is a confirmation candlestick pattern, you can enter a buy position like here. See, after you enter it here, the price bounces upward and you could make some nice profit. Okay, and during the downtrend, of course, it's the other way around. You wait for the price to touch the resistance and you open a sell position during a downtrend. It's like this, but it's reverse, the other way around. Basically, it's the same thing. But during sideways trend, it's not ideal because the price could move up and down anywhere, anytime during sideways trend. There is no pattern. There is no clear trend. So it's confusing, especially for beginners to trade during sideways trend. Like here is a sideways trend. I can draw a yellow line here. It's very confusing, you know, especially for beginners. It's kind of hard. Well, maybe if you're a bit more experienced, you could buy here, sell here. Well, you can, but you know, it's a little bit unclear. And I think it's not ideal for beginners to trade during this sideways trend. You should just wait until you can see a clear uptrend or downtrend. That's better for you. You can make more money, more profits, lower risk, just better in general. Okay, don't force yourself into a trade. Just sometimes you need to wait a little bit to have a better entry position. And then, how do you set the stop loss and take profit? Well, if you are in an uptrend like this, first you can find the stop loss, or you can find the ideal stop loss price by looking at the nearest support or resistance. Like here, if you enter a buy position here, maybe here, or maybe here. Okay, you enter the buy position. Okay, where should I put my stop loss? Well, if you enter a buy position here, you can put your stop loss at the nearest support here. So I'm going to show you here. You enter a buy position. You can just put the stop loss somewhere around here. You know, this price level. After you find the stop loss, then you can calculate or find the right or the ideal take profit price. Just multiply it by 2. So you first need to calculate the distance between your entry price and your stop loss price. As you can see here, the distance is roughly 1,750 points. You see here? Let's just say, let's round it up to 1,700. And for you to get the take profit, just multiply by 2. So you can get a 1:2 risk to reward ratio. And 1:2 risk to reward ratio is a good ratio. It's a good, so you get more profit than your losses. Even if your profits and losses is 50-50, in the end, you still come out on top. You still make more profits than your losses. If you trade with 1:2 risk to reward ratio, if you trade with 1:3 risk to reward ratio, it's even better. Basically, if you don't know what is risk to reward, it's the distance between entry to stop loss compared with the distance between entry price and the take profits. But there is also another entry method where you don't need a stop loss. You don't need to set your take profit. It's called the full margin method. Well, sometimes I do that with my smaller account. I like to do that. It's very convenient. You don't set a stop loss. In that way, you don't set a stop loss. But make sure you only deposit the money you can afford to lose or you're comfortable losing it. For example, you're only comfortable to lose $50. Okay, just put $50 in your full margin account and you go all in. Maximum leverage, no stop loss, no nothing. Well, the maximum you can lose is $50, right? You can only lose 100%. You cannot lose more than 100%. So your stop loss is your stop out. It's basically the same like putting a stop loss, but now your stop loss is your account's stop out. So your stop loss is basically zero. When your balance goes to zero, and that's your stop loss. That's the full margin method. You don't need to set a take profit. You don't need to set a stop loss. I think that's a good way for beginners to learn because it's easier. But you know, your account might get blown. Of course, there's a high risk or high chance of your account blowing up. But if you only deposit the money you are comfortable losing, it's okay. No problem. You can only lose 100%, right? But if the potential gain is 1,000%, why not? But if you want to try this full margin method, all in, no stop loss, of course, you need high leverage. That's why you need a broker that offer unlimited leverage. For me, I use fortunomarkets. Of course, this is one of the best brokers in the world currently because they offer unlimited leverage. Now, as I'm speaking right now, as I'm shooting this video, there is only a few brokers in the world that offer unlimited leverage, and fortunomarkets is the best out of the few brokers that offer unlimited leverage because they have very low spreads, the lowest spread. So yeah, it's very good, unlimited leverage. It means like, if you don't know what is a leverage means you can trade bigger than the money you have in your trading account. For example, 1 to 100 leverage, it means you can trade, technically you can trade $100 worth of asset or maybe gold, Forex, whatever, with just $1 in your trading account. If you use 1,000 leverage, it means you can trade $1,000 worth of asset with just $1 in your trading account. If you use unlimited leverage, it means you can trade unlimited amount of assets with just $1 in your trading. It's insane. It's very good. You can make massive profits with the unlimited leverage. Of course, it comes with greater risk. But you know, if you only deposit or you only put in the money you are comfortable losing, well, why should you worry? It's play money anyway. You can blow your account 1, 2, 3, 4 times in a row, but you can always make it back in one trade on your next account. So no problem. I think I like it that way because it's easier for me. Then you need to calculate the stop loss, the take profit. But you know, different traders have different style. There is no right or wrong. There is the low risk trader who open just a small lot position, use stop loss, tight stop losses, and you know, proper risk management, what they normally call it. Or there is another type of traders who go all in, full margin, but you know, they only use a smaller account. For me, I trade both. In my bigger accounts, of course, I use smaller lot size and then tight stop loss. But in my smaller account, I go all in, full margin. So yeah, with more potential gain, of course, there's more risk. You just need to accept that. That's in life, it's always like that. Whatever or maybe in trading, in investment, whatever you're trading, whatever currency, whatever asset you're trading, it's always like that. The higher the risk, the higher the gain, and vice versa. So yeah, that's basically it. If you want to start trading, I would suggest you to use fortunomarkets. I've said it to you, right? They have unlimited leverage, very low spreads, zero commission, free swap or overnight fees, and they have, if you're into affiliate marketing, they have one of the best affiliate programs. Yeah, basically this is the go-to brokers. They're very safe, credible, they have global presence, very big company, so your money is safe with them, so no problem. This is a very good Forex broker. Not only Forex, they offer gold, Forex, crypto, anything. All assets, more than 300 assets for you to trade. And oh yeah, bonus, I have another strategy. If you like this kind of strategy, you can use this, okay? This strategy, the balls method. First, you can buy at the balls and you can close your position at the tip if you want to. This balls method, okay? I'm joking, okay? But if you want to use this, whatever, any strategy, as long as you make money, it's a good strategy. You know, the thing with strategy is there is no right or wrong. Any strategy will work as long as you make money, okay? So yeah, you can use this if you want. Of course, I'm kidding. Okay, thank you for watching and peace out.